2 months into 2022 and with the start of the endemic phase of COVID-19 in Singapore, while we continue to struggle with the uncertainty of COVID and other macroeconomic factors like rising inflation and interest rate, it is good to note that the real estate sector at least is taking a more optimistic outlook. Hi everyone, my name is Casey from Home Quarters here again to talk about some of the latest happening this February 2022 in Singapore real estate landscape. Now, we just started doing this monthly roundup for you this year, and last month we got such great feedback from you that we are really excited to get started on this month's summary and analysis for you. Starting off with the HDB sector, after a bumper 2021 for the resale HDB market, the trend looks to be staying in the course for at least the start of 2022. And this is despite the government's cooling measure introduced in December of last year. It remains to be seen if the optimism in the resale market will be sustained over the rest of 2022, as it is still early days. While interest in mature estates like Queenstown and Toa Payoh still remains strong, we expect to see some waning of interest as the estimated 23,000 built-to-order flats will become available this year and next, with capacity going up to 100,000 between 2021 and 2025 should demand warrant it. February saw the increase of 3,900 BTO flats in areas like Geylang, Kallang, Whampoa, Tengah and Yishun. Of course, the most highly anticipated was the launch of BTO flat in the Kallang Whampoa area, which is only the second BTO project launched under the prime location housing model. Despite the strict restriction on buying and selling like the 6% subsidy clawback clause upon the first resale and 10 years MOP period, the 294 4-room flat was oversubscribed 16 times. For the May launch, you can expect between 5,200 and 5,700 BTO flats in towns such as Bukit Merah, Jurong West, Queenstown, Tampines, Toa Payoh and Yishun. And if February is anything to go by, the expect demand for bigger unit in mature estate to be where the action is at. Other big events that have affected BTO supply has been the Great Earth liquidation, which caused delay of 5 BTO projects, 2 of which has fortunately been completed ahead of the revised deadline. Buyers affected by such delay have had to seek interim housing while awaiting for their new home, and one such option is to do a rental. So now let's turn our attention to the residential rental market, where with the relaxation of border control, we are finally seeing a labour market recovery that has in turn driven demand in the month of January. Condo rental were up 1.65% in January, with growth observed across the board in all areas, CBD, city fringe and suburb. Year on year, condo rent were up 11.2% from January 2021. Similarly, in mature HDB estate, rent rose 2.9% in January. However, overall in all areas, HDB rent rose 1.2% in January as compared to December, the 19th month running that it has risen. Compared with January 2021, HDB rent were 11.2% higher. With the bullish sentiment in the residential rental market, especially where condos are concerned, what will be the impact on condo sale? For that, we now turn the spotlight on private residential sales. Traditionally, the leading asset of Singapore real estate, private condo and landed sales have always been closely followed by analysts to determine market sentiment. And by far, this is the sector that government measures tend to impact most heavily as well. What a month it's been too for private home sales. We start our look at private residential sale in the new condo sales category because that has usually been the area of most interest. You expect the market to be quiet, with buyers naturally put off by the uncertainty introduced by the cooling measures of December 2021. So it would come as a bit of a surprise to many that sales managed to hold more or less steady. And all this even with the absence of any big new launches to entice hungry buyers. January saw a 3.5% increase in the private home sale from December, but this is still down a whopping 28.5% from January 2021 based on the Urban Redevelopment Authority data. And where has the slowdown come from? Is it mainly in new home sales or resale transaction? Well, it looks like resale transactions have borne the brunt of the contraction, dropping 43.2% in January as compared to December. This is likely attributed to cooling measures like the increased additional buyer stamp duty rate, giving buyers cause to pause. You can expect the declining inventory of the new private launches to keep home prices supported, making the slowdown in demand temporary. There is only 178 new homes on offer in January 2022. the lowest since January 2017. January launches were down 53.5% from the month before as the pandemic continued to cause construction delays. Private condo resale transaction also reported a sharp 23.8% fall in volume in January, even as price stayed firm, rising a small 0.4%. Still, the longer-term outlook may be rosier than it seemed, with COVID-related delay expected for new launch of both HDB and condo. Buyers may lose patience and turn their attention to the resale market. Increasingly higher HDB prices may also serve to encourage buyers to consider condo as well. Record-breaking HDB resale prices is also a temptation for sellers to sell and buy a condo instead. So expect to see an active resale market this year after all the impact of the cooling measures settle down. Now, let's turn our attention to the action in the commercial property sector. And the big news here is that Tanglin Shopping Centre has finally sold for $868 million on the 4th go. The buyer is Singapore-based developer Pacific Eagle Real Estate, which is privately held by the Tanoto family under the Royal Golden Eagles group of companies, with interest in natural fibre, edible oil, green packaging and natural gas for over 50 years. The other big news from the Central Business District involved the $2 billion Singtel redevelopment of its comm centre located just behind the Somerset MRT exit to better realise the potential of the site for more efficient land use. Singtel will set up a joint venture for the project while maintaining a majority stake on the site itself. Slated for completion in 2028, Singtel will occupy 30% of the new space, with the remaining space for lease, contributing to a recurring income stream for Singtel in the longer term. We now turn our sight on the latest land parcel sale in February that has everyone talking. A boutique 32 units freehold development in Joo Chiat, Marine Parade, Katong area, Royal Hallmark recently just moved 10 units on the launch, with the larger units proving popular with buyers as they are rarity in the neighbourhood. Other interesting development in February also include a 99 years, 22,000 kind of a square meter plot of Pine Grove up for public tender. It is estimated that the final successful tender price of the plot can go as high as $1,300 per square foot per plot ratio, which means that the break-even price of development eventually will be around the $2,000 per square foot mark, and the site can yield 520 homes and will increase sorely needed private housing supply in the city fringe area and ease pent-up demand. The second Pine Grove site remains on the reserve lease. Also on the March horizon is the tender for a Dunman Road plot next to Dakota MRT, which can yield about 1,035 private homes. Together, this two land parcel tender is expected to be good news for buoyant property market that have seen unsold stock hit a new low of 14,154 units at the end of 2021. Tokenization has been the buzzword on everyone's lip, but even as it gained popularity due to its ability to lower the barrier to entry and provide access to a type of asset you might not ordinarily be exposed to, this developing trend also can provide real estate owners faster and cheaper financing. It involves generation of a virtual token to represent ownership of an asset. This makes cross-border investment easier as secured transaction record maintained on a distributed ledger ensure transparency. All this results in a larger investor pool, improving liquidity with shorter settlement time, which in turn can facilitate secondary trading on digital security exchange, theoretically. With Singapore Budget 2022, other than the big news of the inevitable increase in the GST spread over 2 years, it is recently announced that there is a rise in the property tax, especially on bigger properties. It certainly does sound like a lot of intervention to allow the government to control the property market. And let us also not forget that the government also has inflation and interest rate in its toolbox to help it keep a lead on the local real estate as well. With all this in place, the true impact of all the measures taken together is hard to ascertain. Some are suggesting that the greatest effect of the increase in property tax will be on the rental in the Central Business District Core. Such properties are the target of property tax hike, and owner may pass on the increased tax expense to the tenant in the form of higher rental. I feel that the increase in property tax will still not deter many luxury property buyers to enter the current market. Alright, so this is it for February 2022. Come back next month for more local market updates and more insight by the Home Quarters team. Remember to subscribe, like and comment what other news you would like us to cover. My name is Casey from Home Quarters, and remember, call Home Quarters and start packing.